Welcome back to another episode of Finance Fridays, and today I'm going to give you 5 stocks that I absolutely love right now. 5 stocks that I believe are in a great buy zone that you all should be adding to your watch list or possibly buying today if you believe it fits within your investment thesis. Now, do remember I'm not a financial advisor, so please take all of this information as education only, but do your research. See if this fits this investing theme. Reach out to your financial advisor and see if these 5 stocks are something you should be adding to your portfolio. Now, I want to be clear. The 5 companies I'm going to mention, they are not get quick rich schemes, okay? They're not 5 stocks that you're just going to double your money in the next couple of months. These are 5 stocks that are going to compound growth over the next 1, 2, 3, 4, 5 years, okay? Some of these stocks might be due for a pop soon. I'm not going to lie, looking at the charts, but I do believe these 5 companies will be sitting in a great spot come 2030. And if you know anything about me, you know I am a long-term investor that loves to buy stocks that are heavily discounted, that everybody is talking about in a negative sense. I love the negative narratives. Those are the companies I go for. If you don't remember last year, I was screaming to buy Google. I bought 65 shares when everybody said Google's dead, and now everybody's obsessed with Google, up over 100% on some of the shares that I bought. And I'm sitting in a great spot. So am I telling you I'm going to be right about these 5 companies? Maybe, maybe not. But I'm going to go ahead and share with you some of the research that I have and my insight, and so that way you can make an informed decision and see if you should add these 5 companies to your portfolio. Company number 1. Probably my new favorite company that I added to my portfolio this year, which is Netflix, okay? Netflix, year to date, is down almost 22%. That is an incredible discount. And honestly, if you look at the charts, it just seems like it might even go lower. So I'm not telling you to buy now. I'm not saying you have to get in. But what I am going to tell you is that last year around April time, the CEO, Ted Sarandos, laid out a strategic path to be able to get to a $1 trillion market cap. So what does that mean? That means the CEO created a 5-year plan to get to 1 trillion. So one of the things I thought to myself was, if Netflix is going to be a $1 trillion company in 5 years, what price would the stock need to be? So I went on ChatGPT, asked it if it could tell me what price the company would be, and it told me that the stock price would basically need to be around $237. Interesting. Okay. $237. Right now, Netflix is sitting at about $78.67. So let's do some math real quick. $237 minus 78.67 means we are looking at a profit of possibly $158 per share. I like the sound of that. So if you're a long-term investor like I am, if you're somebody who wants to accumulate a lot of shares like I do, my personal goal for Netflix is to own about 125 shares. So if I times that by 125 shares, we're looking at almost $20,000 in profit. And like I said, I honestly think Netflix could possibly go lower. So you could probably make even more money buying Netflix on this discount. So why to buy Netflix? Well, let's think about it. What is the number 1 streaming platform that everybody's using? Outside of Google, Netflix has the second most eyeballs. Everybody is going to Netflix. Netflix is going to use AI to be able to create new movies at a cheaper price, new TV shows at a cheaper price, to help with script writing, to help with so many different things. That's going to make them money. What else is going on with Netflix? They're interested in possibly buying Warner Bros. Right now, there's a bit of a bid between Netflix and Paramount in the purchase of Warner Bros. But no matter what, if they lose the bid, they're going to get paid billions of dollars. And if they win the bid, they're going to make billions of dollars. So either way, it's a win-win for Netflix. Because they have a breakup fee would be about almost $3 billion Warner Bros. Would have to pay Netflix if they decided to back out of the deal and go with Paramount. And yes, I would love to have HBO, all the Game of Thrones shows and the different catalog that Warner Bros. Has under Netflix. I think that would help them grow tremendously. I really do. Because then you start thinking about it, they can start creating toys, they can start doing other ventures that they currently don't have outside of just getting you to pay for a streaming service and the increasing ad revenue that they're currently having, right? Because right now Netflix has added ads, and that is the big growth grower for this company right now, is that ad revenue. And they're only going to get better. Just like I've seen Amazon Prime, they've been getting better with their ads. I've been looking at Meta and Instagram, they've been getting better with the ads. With artificial intelligence, it's only going to get better. And if it gets better, you know Americans love to spend, and they're only going to make more money. And then the third reason why I love Netflix that nobody talks about is I want you to do your research on this. How many countries is Netflix actually in? And then I want you to also think about, with everything Elon Musk is doing with SpaceX and getting those satellites out there in space to give more people access to the internet, you tell me if you think these people are not going to want to purchase some Netflix. So as they have better connectivity, better internet service, and more countries has access to Netflix, what's going to happen to their revenue? It's only going to increase. Now, I'm not saying it's going to happen immediately. It's not a get-rich-quick scheme. But I do believe this is a company that could be very, very valuable by 2030. And now this is going to transition me to the next company that I think a lot of people are wrong on, and that is ServiceNow, ticker symbol NOW. Okay. Currently, this stock is down 44% in 1 year. That's crazy. Usually when I see a stock down 44%, I avoid it. I run for the hills. But ServiceNow, I just believe people are getting it wrong. And the reason why I believe that is because Bill McDermott is the CEO of ServiceNow. And Bill McDermott went on national television and said he believes his company's stock is devalued so much that they are going to do a $5 billion share repurchase plan, which means the company is going to buy $5 billion worth of their own shares. And on top of that, he said he's going to try to expedite buying $3 billion as quick as possible. Yeah, we're going to buy 5 billion shares over a time period, but we want to buy 3 billion as quick as possible because we believe all of you are wrong. So let me ask you this. If I'm a CEO and I'm saying this on national television and I'm telling you what we're going to do as a company, and I say it with confidence and conviction, do you think that company is going to keep going down? Why would this guy want to devalue his company even more? He's literally telling you, I know what's going on behind the scenes, and we are so important that you have to be invested in us. We are going to be one of the game changers when it comes to the agentic AI space. And if you don't believe me, ask Jensen Huang, the godfather of AI, the CEO of NVIDIA. He has mentioned that there's really 3 layers of AI. You have that compute with the data centers and the GPU. Then you have that physical AI, which is happening with autonomous driving and Tesla robots. And then that other layer of AI, which is the agentic AI, those AI agents that are just going to be able to do anything that you give it a task to do. And ServiceNow is one of those big players in that space. And it is heavily, heavily down. And so how I'm playing ServiceNow right now is just buy a couple shares. When I have some money, I just buy 1 or 2 shares, just dollar cost averaging, not putting in too much. Could ServiceNow go lower? 100%. But the upside to me for this company is definitely above $160, maybe to $210. I like those odds. I like that upside. And if you think ChatGPT or Claude is just going to wipe away the entire agentic AI space, you are sadly mistaken. That's all I'm going to say. You got to do a little bit more research, but you are sadly mistaken. All right. Now we're going from one software stock to another one. This one, I probably don't need to explain. You've heard of this company before, Microsoft. Microsoft under $400 is screaming buy to me. Okay. And I know it's screaming buy to me because I bought 1 share for like the past 2 weeks while it's been under $400. And guess what? I'm going to buy another share this week if it's still under $400. All right. Microsoft, I really don't need to explain it. It basically has its hands in everything. Think about the Surface Pro. There's hardware, laptops, devices. There's software, Microsoft Word, Excel. And there's also AI with Copilot. And it owns a part of ChatGPT. So if you use ChatGPT and you love it, you feel like it's great, it's amazing, it's going to change the world. Well, guess what? Microsoft is an investor in ChatGPT. Microsoft is literally going to be the behind the scenes player for everybody to be able to maximize AI. Whether it's through their Azure cloud business, whether it's through their AI software platforms, or whether it's through the investments that they make. Microsoft is a big deal. And it's not going nowhere. And I firmly believe this company will have a minimum 6 in front of its number by 2030. So if I can get it at $400 and it's going to have at least a 6 by 2030, we're talking $200 a share. I like that type of money. All right, now let's transition to another software stock that's got beaten up for no reason. CrowdStrike. Cybersecurity. It's the best at endpoint detection. All right, it's down 17% year to date. Not in 1 year, just this year alone, it's down 17%. And I personally love CrowdStrike at $385 or less. Just me personally, I love it at $385 or less. And right now, analysts are predicting CrowdStrike's target price should be $545. Okay, sure, I'll take that. The upside is $545, and right now it's sitting at $388. The reason why CrowdStrike is so important is because as we get more into the AI layer, the Agentic AI, everything being on the internet, everything being up in cloud, we have to protect it. And not only that, times are getting tough. We've seen what happened in Venezuela. You see on the news what just happened in Mexico. You see on the news what's happening in Iran. You see what's going on in the world right now. And when there's turmoil, when there's people losing money, when there's recession talk happening, that's when you're going to see more crime. And the number one crime you're going to see an increase of: hacking. People are going to be coming for your information. They're going to try to hack your bank accounts, your brokerage accounts, your crypto accounts. They're going to try to steal your identity. This is why cybersecurity in CrowdStrike is needed, and it's not going anywhere. Think about all the turmoil that is happening right now in the world. Everything that's going on in Mexico, everything that's going on in Iran, everything that just happened in Venezuela. And if we do hit a recession and times are tough, you don't think more people are going to try to hack into your information and steal your money, steal your identity? You don't think companies know that, and they know that they need to protect everything? Cybersecurity, man. There's no way ChatGPT or Claude is going to replace that. And if you want a bonus stock, Palo Alto is another great company too. Pick either one. Put some money in there. I promise you in 5 years, you will not regret it. We have to protect our information. We have to protect our data. It's not optional. It's not negotiable. And if you think that because Claude created some small cybersecurity thing, that's going to replace companies that have been working on cybersecurity for over 10 years, you are sadly mistaken. Sadly mistaken. We're going to need CrowdStrike. We're going to need Palo Alto. And if you don't want to protect your information, then go ahead, get hacked. Let them steal all your money out of your bank account. Let them steal all your crypto. Let them steal your identity, your passport, whatever the case. Let them steal it. Go ahead, let them steal it. At this point, it just doesn't make sense. Some of the things that people are thinking are happening with AI and how it's just going to take over the world. At this point, I guess artificial intelligence is just going to do everything, and then nobody's going to do anything. What's the point of anybody having a job? Artificial intelligence will just do it. That's not the way it goes. You're still going to need human counterparts. You're still going to need people to do activities. You're still going to need some solid companies. Claude and ChatGPT are not going to be the only two companies that can do everything that you need it to do in the world. Trust me. They're game changers, but they're not going to take over the entire world. All right. Now we're going to transition to stock number 5. We got to go crypto, man. We got to go crypto. Alternative currency, none other than Robinhood. All right. We're looking at a 32% discount year to date, which is crazy. Okay. Not too long ago, this stock was $153. Right now it's sitting at $76. It's almost half of how much it was worth like a couple of months ago, which is crazy to talk about. But that's all because crypto had a big deleveraging event. Trillions of dollars have been wiped out of the crypto market. We've seen Bitcoin go from like 125,000. Now it's sitting around like $65, $66, $67,000. So it's scary times. And because of those scary times, Robinhood lost a lot of money. They had a 38% year-over-year decline in their crypto revenue. When crypto is booming, when people are trading XRP, Bitcoin, Ethereum, Robinhood makes a lot of money. But there's two things that I think that could actually boost Robinhood and help it get back to those $150 levels. Okay, I'm talking about 100% gain. Two things. One, if you haven't yet, I want you to Google Trump accounts. There are these new accounts that the Trump administration is rolling out where they want people to be investing in these accounts for their kids. And one of the possible custodians for the Trump accounts is Robinhood. So if Robinhood gets that, that means more money is going to be put on the Robinhood platform. And whenever there is more money on these brokerage accounts, on these firms, it's only going to help their bottom line because there's going to be transaction fees, and that's how they make a boatload of their money. So one, I really like the fact that they are in contention for the custodial accounts. Two, going forward, there's been no richer generation, and this is documented. This is not me talking about it. This is not me making this up. You can Google it. There has been no richer generation ever in the history of the world than the boomer generation. And when the boomers pass, the money is going to be passed on to their kids and their grandkids. And their kids' ages are probably between 35 to 24. I want you to Google and search what type of brokerage accounts or who do those people between 24 and 35 have their brokerage account with. Is it with Goldman Sachs? Is it with Vanguard, Fidelity, E-Trade, Charles Schwab, or is it Robinhood? So if we are talking about the largest wealth transfer in the world is going to be happening within the next probably 5 to 20 years to people who have Robinhood accounts and going to be investing on Robinhood, going to be interested in buying crypto. Tell me a 30-year-old that you know that's not interested in crypto. Tell me a 25-year-old that you know that's not interested in crypto. I think there's going to be a lot of money that Robinhood can make. And I didn't even talk about the predictive markets. The whole Kalshi being able to bet and gamble on things. Robinhood is literally turning their brokerage platform into a gambling casino. And if you think for 1 second that casinos do not make money, you are sadly mistaken. So if you think for 1 second Robinhood is not going to make money in the future, we're not talking about immediately, in 3, 4, 5, 10 years time, you are sadly mistaken. So those are 5 stocks I want you to do your research on and see if they fit with your investment thesis, your investment portfolio. Netflix, Microsoft, ServiceNow, CrowdStrike, Robinhood. All of them I would anticipate being higher in 2030. All of them I would anticipate making you a boatload of money by 2030 or beyond. All right. Those 5 stocks, add it to your watch list, do some research, see if these are 5 stocks you want to add to your portfolio. If you have any questions, please do not hesitate to reach out to us, capsulerxpodcast@gmail.com. You can shoot us an email or follow us on Instagram or YouTube at new_capsulerxpodcast. Shoot me a DM, shoot me a comment. We would love to connect with you and help you. And remember, investing's not hard. It's actually really, really simple. And if you need somebody to walk you through it, to kind of guide you, to mentor you on your path to financial freedom, you already know what to do. Go ahead and sign up for the financial mentorship program, and we will do our best to help guide you to financial freedom.